Hey, folks, welcome to InTheMoneyStocks.com's intraday analysis video, brought to you by the creators of proprietary price, pattern, and time methodology. Learn the PPT strategies and profit for life. My name is Gareth Soloway, Chief Market Strategist here at InTheMoneyStocks.com. All right, today's date, Tuesday, March 25th, 2014. Markets have been on a pretty wild ride today. Early in the day, we had a gap up and a push higher into the 200 moving average, at which point the markets had a pretty substantial reversal, coming all the way down to gap fill. So up here are the spiders. The S&P was up about 10 plus points, and then you reverse to go briefly negative before now bouncing off of gap fill and making your way back towards those highs. Now, we haven't taken out those highs yet, but again, you could be starting to form a bullish consolidation intraday chart setup here. So it is something we want to pay attention to. Now, what's going on with this market? Yesterday, we had a pretty ugly reversal and sell-off. By the end of the day, the markets cut the losses a little bit, but really the tech sector got hammered the most of all. And today, kind of back to the green side. Across the board, we have the NASDAQ up about 9 points on the day. S&P's up about 9 points as well. Dow is leading the charge up 117 points. Now, anytime the Dow leads, you want to be a little suspicious about the overall strength of the market on an underlying basis. And you might say, well, how come? And the answer is pretty simple, because the Dow are dividend, old school, safe stocks. So what this tells us, and from the NASDAQ collapsing the last few days, it tells us that people don't want to put as much risk on the table right now. All right, they're trimming their risk, therefore they're selling their risky assets and moving into the safer stocks out there. And again, those safer stocks obviously are stocks like IBM. If you look at IBM today, let me bring up the chart. IBM is having a tremendous day, up about $3. Or actually, check that. It's up about $6.65 today, or about 3.5%. So that's a big move on IBM. Just alone in the Dow, this move on IBM of 6.5 points is probably about 40 points of the Dow's move. I mean, just right there. And then if you look at other leading stocks like DuPont today, DuPont up about 75 cents. That's a solid move there. We're seeing J&J, Johnson & Johnson, which is an old school drug maker, up 2% or $2 on the day as well. So again, we're seeing a continued rotation away from the riskier assets. If you look at the spiders, right, let's go back to the SPY. SPY right now is up 90 cents. Now look at the Russell index, which is small caps. Russell is negative on the day. And again, look at the Qs. All right, if we bring up the QQQ, triple Q, which is the NASDAQ, it's up 27 cents or 0.3%, much lower than the Dow or the S&P. So again, folks, right now you're not seeing a full-fledged, and this is a very interesting little note here. You're not seeing a full-fledged sell everything, dump everything event. What you're seeing is picking and choosing about where people want to be invested. And again, right now we're seeing sell the riskier assets, sell the price line, sell the Netflix. I mean, if you look at Netflix again today, folks, down over $5. It's off its lows, but it's down again. Now, we scalped this at the lows of the chart today a couple times, which is a beautiful trade in the intraday stock chat. But again, the point is, the riskier, wilder trading stocks are down. Take a look at Priceline, down $2 right now, although that's come off the highs. While, again, you're looking at the safe plays like IBM, and the stocks are trading higher. So it's a choice. Now, that's usually the in-between stage. That's usually the in-between stage between a market top and the beginning of a bigger sell-off, is where you're seeing these mid-level stocks come in here and getting kind of the risky plays selling while the safer plays see the buying. Okay? So that's what we have going on there, folks. And again, the spiders, the way they're acting, this is the beginnings of a bullish pattern. We'll see if it holds true. If it does hold true, double top and this little pivot up here, which was the high from yesterday, would be your first resistance point. Okay? Other than that, if we take a look at the commodity area, let's take a look at the GLD today. GLD not doing a whole lot, basically flat on the day. On the daily chart, I do have an interesting level that I will make you aware of. It's right down here. See this necktie? So if we could see a little bit of flush on the GLD tomorrow or even today into that level, I actually do think there's a buying opportunity there. There's a gap fill right there. There's a necktie. I do think that gold gets a little bit of a bounce off of that range. But again, it has to come in there. Probably today or tomorrow would be the last couple days that this would be a valid trade. If it doesn't hit it tomorrow, then it's too much consolidation and you would want to ignore it. Okay, silver. How's silver performing? Because it's been an ugly silver trade lately, folks. We've been seeing silver hammered. Again, silver is slightly down today. Much like gold, it's basically on the flat line. But look at this collapse below all three moving averages as opposed to the GLD chart. And this is the SLV for those of you at home watching. Where would I be a buyer of the SLV? Where would I be a buyer of silver? It's a little trickier, folks, I will say. I would say on a straight shot down in the next couple days, this would be my first opportunity. And then if it looks too weak there, I'll step back and let it go down here. Any buys on silver, make sure you understand this. They would be short-term buying opportunities. That's it. Short-term buys where you would play it for maybe a 3 to 5 day trading bounce and you would step aside and then you'd let it go lower. All right, so be aware. I mean, remember, when you're taking a swing trade, you need to know how long you should hold it before you need to get out, before it's going to reverse. Because really, when you're playing swing trades, in general, you could be playing a bullish flag pattern, in which case you're going with trend usually. But aside from that, if you're playing a specific price point, you're going counter trend. Now, as I always say, there's a lot of pundits out there, a lot of idiots, frankly, that say don't fight the trend. All that means is that they don't know how to read charts. If you know how to read a chart, you can find the level where it's going to bounce and you play it, or you find the level where it's going to pull back and you play it. It's very simple to do. I've been doing it for literally well over a decade at this point, very profitably. And again, you can look at our track record for the Research Center for proof in the pudding. But again, the key is it's also a time factor. So it's not just where a level is going to see a bounce on a stock. It's also a matter of looking at it and saying, okay, well, at this level, what is my time factor for that bounce? And again, most of you that might be watching these videos don't really understand that. That's why you need to come to InTheMoneyStocks.com. It's very simple. Come to In The Money Stocks. I teach all our members that. In fact, we have a webinar this Saturday called the Methodology Revealed course, which will go into a lot of these proprietary signals and give our members really the point where they're going to be just off to the races profitability-wise. It's really awesome stuff, to be honest. Okay? So that's what we're seeing here. A couple other stocks to watch. Goldman Sachs down about $1. Financials have really led this market of late, and we are seeing especially Goldman over the last few trading days collapse back down. JPM, on the other hand, has stayed pretty strong. Look at the JPM chart. Now, I actually pointed this out to members this morning that there is a little bit of a resistance level up here on JP Morgan Chase. So, number one, take this little high right here and connect it through this high and these highs, and you essentially get the high of the day. Notice pivot to pivot to pivot, and then right there. All right, so there's a little bit of a side note there that you want to pay attention to. Okay? And again, that actually tells me that JPM is probably running out of steam up here, and most likely we'll see some sort of pullback in the short term, most likely in the next 3 to 5 trading days. You should see it pull back off this level before it has another push up. All right? Aside from that, just kind of scanning through, it's been another good solid scalping day in the intraday stock chat. Priceline I scalped today for $5 off of a key level that I gave out in the intraday stock chat. Netflix I took $2 on a scalp there. So there were a couple nice trades today, and that's what you're looking for. And, as someone was pointing out, is, you just make $300 a day in profits, and it really turns out to be a pretty nice salary for the week, which would be $1,500, and for the month, $6,000. Just on $300 I can make in my sleep on just one trade a day. And now I'm trying to do, personally, I do about 5 to 10 trades a day, making anywhere between, $300 and $700 per trade. So you're talking, two plus thousand pretty easily on an average trading day. And that's just day trading, not including swing trading. Swing trading is just the bonus or the icing on the cake. So, again, that's what we do here at InTheMoneyStocks.com. We offer a 7-day free trial for brand new members, and we encourage you to come check us out, especially if you're into the swing trading. If you work all day, then the Research Center is what you want. That's the swing trading side. A couple other stocks to take a note of. Baidu today continuing to show some weakness, but it's off its lows. But again, notice how it is negative on the day, down 38 cents with the green market, so it is weaker than the general market. I will not touch Baidu unless it flushes into this lower level here. Gets down here, now we're talking. Now that starts to look very interesting to me. Until then, really no interest whatsoever on that chart. A couple other big names out there. Chevron is kind of an old school stock, right? Chevron is kind of those old school dividend payers. It's not going to make you $1 billion in a short amount of time, but it will kind of grind for you. And sure enough, look at what Chevron's doing today. So my thesis from the beginning of the video today kind of proven perfectly here with Chevron up about $1.22. If we look at Exxon, Exxon's up about 43 cents as well. So again, safety stocks, that's where the money flow is going. It's coming out of higher risk beta stocks, and ultimately that's the mid-level between a top in the market and a reversal in the market and a down move. So right now you're in that topping pattern from what we're seeing. Doesn't mean we can't pop up a little bit more in this market, but it's just that topping formation that you have to recognize as an intelligent, profitable trader. Take care, guys. Have a great afternoon, great evening. Come join us here at InTheMoneyStocks.com.